Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a phenomenal day. We're looking pretty good here on the market. I think altcoins are going to be doing very well here today. We're going to discuss that as well as PPI data coming out tomorrow. Furthermore, as well, some order block data here at 87.5, that local resistance for Bitcoin, but specifically Ethereum dominance doing much better than Bitcoin dominance, and Bitcoin price is actually increasing. So that's a good sign here for altcoins, as well as, of course, some CME gaps we want to talk about there having been filled. So be sure to stick around. We got a good one today. Let's take a look. All right, folks, before we jump into some of the back-end data here, I just want to start off here first with our Bitcoin analysis and just kind of discuss the producer price index. Basically, I provided this here on our Twitter, Telegram, and Discord. If you're not familiar, make sure you read through it, just give you some perspective on what's going on there. But generally speaking, PPI data comes out tomorrow at 8:30 a.m. Eastern Standard Time. And generally speaking, if we're going to see higher PPI, it basically increases the odds of inflation, and it provides some more hawkish, higher for longer Fed path, right? Which generally isn't always favorable. Crypto is doing much better, or does much better, if we have disinflation, of course, and or just lower than expected PPI. So it's kind of what we're hoping for there. We'll see what's going on there. I think the expected is the forecast is 0.3 and previous was 0.7. And the actual right now is negative 0.1. So just kind of give you some perspective. That's where we're at there. Now, jumping into the backend data, quickly to note, 87.5 is kind of that local resistance wall there for just a larger order block. This is nothing super substantial like yesterday. We saw 88,000 as that heavy area of concentration. And by the way, we were able to short 88,000 and hit our entry at 88K exactly there, and got down to about 34% for that CME gap fill for that short-term pullback over the weekend. Now, obviously, all pullbacks aside, and that CME gap now having been filled, we want to talk about what that's going to do for us. So just to quickly note, look at this perfect candle wick down. This is not this is precision from market makers, folks. Perfect sell off to 85.2K. And the price immediately turns back around. Had I been awake for that, or not feeding my child this morning, I would be actually probably having taken a long right in that range. Now, is it too late to take a long? We'll talk about that and find out. But CME futures for ETH and Solana are also filled as well. So all the gaps are filled there. And if you didn't catch my my update here on social media, just to kind of clarify, I was talking about these short-term pullbacks here to these levels, which all three of them were hit. Okay, so this is good news. Overall, generally what we're looking for here to be able to take longs with more confidence. Take a look here at the liquidation map. Last 24 hours here is as follows. We're seeing liquidation start to pile up both above and below, but once more, I mentioned previously that $88,000 range is heavier. Now, this is the 24-hour period. These are late shorts here that are about to get destroyed. Granted, we've walked away with some profits, and you shouldn't hold that short position open after we took profit, right? That's the concept. Always adjust your stop loss into profit or close a trade once you've hit your targets, right? Don't get super greedy. All that said, when we see here, just above 88,000, between 88 and 89K is that secondary area of liquidation above the price. That's why that's kind of a resistance range for us between 88 and 90,000, because there's a ton of liquidation in that range. That isn't the reason why it's resistance, but liquidation accumulates at resistance zones, right? So that's kind of what we're looking at there. That's why we're going to experience initially probably a short-term rejection at that level, which we already saw at 88,000. All that said, liquidation data for the last 30 days is kind of sparse, but once more, 88.5 is that super large, significant amount of accumulation there for liquidation. Okay, so that's kind of where we're at there. Now, when we take a look here at fear and greed index, it's tapering off, or up to a 12 from a 10 from yesterday. So nothing super substantial there. Be interested to see what the ETF net inflows are going to be looking like here, but we've seen a significant amount of outflows here recently. So I wouldn't be surprised we're starting to tentatively bottom out here for the moment. Let's look at the back-end data here really quick and just quickly understand here that there is a lot of liquidation above and below the price still here, of course, based on these are high leverage positions, these little dots here. The key takeaway is that fear and greed index is still high to the downside. We're in this position right now where we're becoming massively overextended, and the likelihood of reversal to the upside is higher, right? I don't think we're going to shoot to 120K in any time soon, but I do think that 90 to 100,000 is a distinct possibility just based on how massively overextended we are. Now, whether we get through those barriers or not is still yet to be seen, but between now and then, we're going to talk about key level resistances for Bitcoin if you're considering a long, and obviously some areas of liquidation below the price too if you're considering a short position too. On the right hand side, we can see open interest is heaviest at 92,000. Locally though, we're starting to see this heavier concentration here. This isn't super massive, but 85.2, that's right where the CME gap bottom was at. That's where the price wicked down and immediately bounced, right? So 85,200 is at local support. Secondary to that, 82.2. So 82.2, 85.2, two easy round numbers to remember. All that said, liquidation delta is approaching break even. Let's go ahead and get a little refresh here and see this most recent pump's kind of tapering it off. But yeah, we're getting closer to break even there at 4 billion in the red versus what, 16 billion like 2 or 3 days ago, right? So Friday was bad. Today's a bit better there. We're seeing that shift in momentum happening. And as you see the liquidation delta start to taper off, that tells us the bulls are, there's more buying pressure. More people are trying to buy. It doesn't mean that the sellers aren't still there, because they definitely have more power right now still, but they're getting exhausted here. And as you can see, there's a lot of liquidation between 91.5 and 88.2. So the local highs here, I think a run to 90 to 91K is sensible at this point. But once more, we want to double check a few things. So let's go ahead and double check here. Look at the lower time frames, kind of go from there. Starting off with the daily, just to clarify here, this is a pretty significant overextension. We hit a 9 plus 1, 2, 3, 4. We had 4 super significant corrections after an overextended state. So we moved about 13 days in a row in the red. So that was just a kind of a terrible, terrible situation. We all experienced that. But all that said, this $86,000 support range is holding so far. That's a previous closure on the weekly, by the way. If you're wondering where these numbers come from, these are weekly closures here. And we can see we spent a lot of time here below 86K before the price took off. That was back when Fear and Greed Index was super low as well, back down in like the 10 to 12 range when, again, Trump was shaking things up. Now, at this point here, we got somewhat of a bottoming out here. We haven't truly closed below 86,000 on the weekly, and that's super important. Okay, so 86K, 78K, and 71.5K are those 3 areas of support based on previous closures and some confluence with Fibonacci retracement levels. Daily time frame, just to kind of note here, there's nothing super significant, but we are approaching this 30 level on the RSI. Generally speaking, when you break above that, that's a good sign to either A, consider long, or B, to close your short and profit. Okay, so if you have a short position from a long time ago, or a couple days ago even still, you'd still be in profit. Secure some profits, folks. Don't be a greedy SOB. This is not the kind of market for that, right? You got to secure profits when you can. No profitable trader has ever gone broke by securing profits. They've gone broke by being greedy and holding on for too long and turning a green trade into a red trade. That's how it works. Anyways, daily time frame. There's not much else to really note. There's nothing hidden or amazing here. The truth is, we are seeing that RSI divergence, which I think we identified yesterday on the 3-day time frame. If you look here, we are seeing this bottoming out here at the 30 on the RSI. And previously, anytime we've hit these overextended states, we've recovered quite quickly. So it's unusual for the RSI to come under 30 on a 3-day time frame, basically implying that we should see the price continue higher here moving forward. All that said, 4-hour time frame is going to go probably tell us roughly the same thing. This is kind of just an explanation of why we shorted yesterday, though. So give you some perspective. We hit a 9 on TD sequential. We retested that local high here at 88,000, and that was an area in which we were able to get in right here. Okay, so there's a lot of reasons why that worked out, but most of it was based on local resistance, previous highs working as a new high, as well as overextension leading into a weekend with low volume. So those is just like a perfect recipe for shorting, at least based on the direction we're heading, right? It doesn't always work that way, but generally speaking, the inverse can work too, where you see significant selling pressure on a weekend, and then Sunday, you'll typically see a pump on Sunday afternoon to recover. All that said, everything worked out quite well and seamlessly here with that CME gap fill, and at this point here, the price running. So congrats to those who got in at the bottom there at the 85.5 mark, and let's go ahead and see where this heads next. Let's take a closer look at some altcoins here. All right, folks, let's take a quick look here at Ethereum. And just to start off with this here, just some quick fundamentals here. Tom Lee's Bitmine just scooped up another $82 million worth of ETH. So pretty big deal there. Acquired quite a lot. In fact, you can actually see this on the chart here. This big volume here, this was Tom Lee purchasing. All right, so cool stuff there in that sense, kind of implying that they were buying the dip at 2,800. And that's a good sign overall for this coin. We also recognize too, if you didn't catch this earlier, perhaps you fast forwarded, but there is a market cap dominance here for Ethereum starting to give us a bullish engulfing candle here. So it's a very good sign here letting us know that money's flowing into Ethereum and stablecoin and moving away from Bitcoin, even though Bitcoin price is increasing. It's a good sign, right? So generally speaking, that's what we're looking for here, ultimately to be able to take a trade with confidence on coins like these. So let's take a quick peek here at the comparison. We can see a very similar scenario here, only Ethereum showing a little bit more strength, of course, kind of consolidating in higher range where Bitcoin pulled back to ramp back up. We can see Ethereum didn't pull back quite as hard. So it didn't establish lower highs and lower lows. It is essentially establishing higher lows and higher highs on much lower time frames, right? So it's generally a good early sign of reversal. Take a look here at the liquidation data. Far right-hand side, once more, just reiterating 2750. That's where the CME gap was at previously. We saw a candle wick down to fill that previous gap from the weekend. So 2750 is that local point of control, and roughly 2850 is that current resistance range for us here. So we're right there testing that level at this point. We can also recognize, too, the liquidation delta is tapering off. In fact, let me get a little refresh here just to make sure we got the current data. Yeah, we can see it's tapering off there, of course, getting closer to break even. Similar to Bitcoin in that sense, where we're seeing that shift in momentum slowly happen as we approach that local resistance of 2850, which we're currently above that actually at this moment. Taking a look at liquidation. 2930, we identified this yesterday being a heavy concentration above the price. That's a distinct probability for the next target. So if you're going to consider a long on this coin, secure profits between now and 2950 is a round number, just to ensure that you're not getting too greedy. Yes, 3100 and 3200 have a lot of respective liquidation zones there, but the local one, you want to pay more attention to that because that's closer and it's more likely to get hit because oftentimes we're seeing price action turn right around in a lot of cases once you hit those liquidation zones. So kind of play your trades on those levels alone. Okay. Now, having said that, daily time frame, we're consolidating nicely at this 0.618 golden pocket fib level there. That was a previous high, working as a new low range. So 26 to 2800 as identified over the weekend is kind of just that nice consolidation area or that zone here for us where we're more likely to go higher and not go lower pending Bitcoin doesn't dump towards 80,000 again, right? Should be in pretty good shape. Having said all that, we can see open interest, this is not open interest, this is the RSI, increasing back up over 30, so that's a very good sign, kind of reclaiming that in the daily time frame. Stochastic rather, MACD is starting to converge, but it hasn't quite done so yet, but money flow index is still tapering off. So keep in mind, for the most part, these are early signs of reversal. They're not indicative of significant trend reversal, but it does kind of tell us that we are seeing a short-term, potential progression towards this descending trend line, or more so just that resistance at 3,000 to 3,100. Okay, that's kind of where those SMAs are at. Other than that, really not much else to note. The 4-hour time frame is looking pretty bullish here as well, with a nice convergence of the MACD that started over the weekend. And of course, we're back up over 50 in the RSI with MFI increasing and stochastic swinging up. Those are generally signs I like to take longs into. So hypothetically, a long to the 2950, 2930 range seems practical at this point, especially having broken our local high range here of 2850 and that CME gap getting mostly filled there. Okay, so those are awesome stuff, or definitely good signs here for us. What are your thoughts? Why don't you comment below? Let's take a look at the next one. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. All right, folks, take a quick look here at Solana, starting to work well in this Power of 3 potential setup here for us for that continuation and progression higher. I think there's a distinct probability we do actually hit that 145 level now that the Solana CME gap over the weekend got filled, Bitcoin CME gap got filled, bounced perfectly off that 85K range, and of course is now running towards the upside. So taking a quick look here at the comparison, we can see most altcoins are looking like this here, where while Bitcoin is looking pretty strong in the short term. Overall, we can see Solana is doing quite well, responding much better than most other altcoins. So Solana does definitely look like that little bit of a front runner there, and we're going to double check some back end to see if that could hold. So look on the right hand side. Solana 131 for the area of open interest. That's a current resistance range for us, but also that support level, right? Obviously, we're likely going to close above that level. So we're going to presume that 130 to 131, even 129 where that CME gap was at, is going to be that solid support range for us, that $2 range, which is Excellent. It held very well. Congrats again to our traders who got in on that. Speaking of congrats, quick little congrats on our Bitcoin short from 88,000 to 85.5. That was awesome stuff. Congrats on that, folks. Now take a look here at the liquidation zone. We can see this hasn't changed too much. This is roughly the same from yesterday. Liquidation just below the local range of 124. And just above the local high of 135. So 135 is on the docket here for the next potential target. As we can see, if we kind of refresh, the price is getting very close there. So shorts are probably very, very scared right now. they're making a mess in their pants, if you will. All right. So that's a good sign here for Solana. More likely than not going to break that threshold here. Now let's go ahead and talk a little bit about the daily time frame and just kind of clarify. We're still in a macro descending trend, right? So if you kind of zoom out, you can see we still haven't broken free from that. In fact, until we're over the 20-day SMA, we shouldn't have any we're back on track kind of thoughts, right? I think tentatively we're good to go between now and the 140s, but I think breaking that level is going to be challenging just because we got a lot of resistance in that zone from previous lows and local highs. Both haven't been retested yet. So all that being said, daily time frame is showing early signs of reversal. MACD convergence specifically is the bigger catalyst there on the daily. You don't see that very much right now. Same thing with stochastic swinging up for the second or third time, and then money flow index also being low. I'm not concerned with that because once more, we got nothing but selling pressure leading into it. So it's just that common rule of thumb here, what goes down must come up. Okay, so we're seeing that here now for Solana. So I personally feel Solana is going to continue to push. If we look at the hourly time frame, we can see we're maintaining above the cloud as well, and we're just in really good shape here above most moving averages. Minus 200, but that's it's nothing really to worry about. But mostly converging on all time frames here, both lower and larger. Okay, and that's a very good sign. So under the impression Bitcoin doesn't like just stall out and get like stuck on stupid here, we're in pretty good shape to see further upside. If Bitcoin were to reclaim that 88 to 90K range, sweep that upper area of liquidation, I think Solana will run to somewhere in the range of 140, 145. It seems like it's ready to rock and roll here. It's got some pretty good price action. Just be mindful, folks. What goes up must come down, but also what goes down, what goes up and down, it all kind of works out that way, right? It always ends up averaging itself out. So just make sure you secure profits. That's the easy way to understand what I'm trying to say here, because if you're not securing profits, it's very difficult and challenging to walk away in the green if you're just constantly shooting for that moonshot. It's just not really the market we're in right now. Okay, so that's the friendly advice there. I hope that makes sense. All right, folks, take a quick look here at Chop Suey. And that's kind of how this coin goes sometimes. It really runs fast when it wants to. And at this point, it makes sense that it's going to continue to progress higher based on this local range of 140 being broken. Keep in mind, we identified 150 as that previous resistance range. So don't get super greedy on these trades if you're considering a long position. But at this point, breaking through that local high, most altcoins absorbing some of that market dominance, stable coin dominance coming down. Those are all very good signs for coins like these. Now take a look here at SUI just to kind of give you some perspective. Local range is 140 to 132. All right, so we broke that range to the upside. We want to close above that today, I would say on the 4-hour at the least, maybe even the daily, just to get some confirmation that we're going in the right direction. But this is a very good sign. Pending Bitcoin doesn't dump, we're in pretty good shape. And as you can see here, actually the local, when the price pulled back here for SUI, it didn't pull back super aggressive as per usual. So it's actually starting to find its bottom in this range of 130 to 140 rather. And I think that's a good sign here. Just be very careful. This coin has a tendency of running quite literally in both directions. So just make sure you pay attention to these coins. This one specifically, if you're considering trading it, I don't recommend setting it and forgetting it unless you have tight targets, okay? And of course, obviously a tight stop loss. Here's that 150 resistance there for open interest. Let's take a quick look at liquidation. Is this tapered off at all? We are seeing, yeah, a good reduction there. Essentially, it's almost cut in half there. So we got about half the amount of shorts there in trying to short this coin versus a couple of hours ago, which is a good sign. That's kind of moving towards a trend reversal, okay? All that said, still a ton of liquidation on the downside. That's what makes me a little apprehensive on wanting to take a long on this coin, because this liquidation between 120 and 130 is just super mega. It's really big. But once more, you can kind of see on the charts here, it's heavily guarded too. Every time the price comes down to 130, it gets bought up really quick. So that's a positive sign overall. All that being said here, taking a look at the hourly, actually, we already looked at that. Let's look at the daily time frame and just kind of recognize we're still in a descending trend here. We're still well below the 20-day SMA. Till we reclaim that, or just say even 30 on the RSI, I don't really think it's worth a buy at this point. That's just me personally. The macro structure still looks terrible. Most coins don't look great, But we've already identified today, like Solana and Ethereum, they're shifting that momentum on the daily time frame, where SUI is so massively sold off that you're not really seeing that kind of no convergences on the daily time frame, right? So just some things to be mindful of. Obviously, that can change if this lower time frame they continue to progress positively, which we're seeing here. We're right there at 50 on the RSI. Money flow index is increasing too. It's generally favorable, and everything looks really good here on the 4-hour, right? We're not massively overextended either. I think continuation higher is more likely, right? But what I'm trying to get at here is a short-term continuation is more likely than a long-term one, at least until we can kind of prove that we can get back on track on the, consistently on the lower time frames. At this point, it's like the first breakouts. I wouldn't trust it. It's just too early to trust. So once more, if you're going to consider a long, I don't fault you for that because most things are moving right now. But I think that 150 is going to prove as a resistance here for us. We can see that there was some consolidation here where the price action worked itself into a new low for a little while, and then really hasn't been able to retest as a new high yet. So I think 150 will be our initial resistance for us. Either way, I'll post our playout chart here on social media, and let's go ahead and take a look at another one. All right, folks, take a quick look here at XRP now. And just want to clarify a quick couple of things here. First of all, what these lines mean on the chart. This white line here is basically a 3-day candlestick closure, kind of an important level of roughly 190. That's the previous low that we saw that we never have truly closed below. And at this point here, from a macro structure, we can also see this most recent overextension leading into that zone that was heavily guarded. So we haven't yet closed below that level. The $190 to $2 range is a significant support for us. Take a look here at XRP on the right-hand side. These are lower time frames compared with Bitcoin on the left. And the easy way to understand it is that we can see a significant continuation progression higher above its local high. We can also see Bitcoin pulling back and XRP shooting a little bit further here. So that leads me to believe that XRP is more likely to continue to run towards its local resistance of that 217 to 220 range. Just keep in mind, breaking through that level is going to take a lot of volume, and I'll explain why that's the case here in just a little bit. Take a look here first of all. At open interest on the right-hand side, we can see once more, there's that 219, 220 range of open interest. Heavy amount of volume there in general, right? And that's generally going to be construed as a magnet. The price likes to work towards those levels. So I think we're more likely to see 220 than we are to see 190. But at this point, with $2 being that heavy support range, consolidating between now and 210 makes a lot of sense as far as the price action, and also a dollar cost average consideration too. So I think 2 to 210 is a good area to consider adding to your spot bag. We can see liquidation delta is also increasing. It's a very good sign. It shows us that we have more bulls than bears trading this coin. So that's a very, very good sign here overall. And on the left-hand side, we can also recognize too that 210, 216, those are the two heavy outliers. So just above the current price point and that 216 level are the two heavy concentrations of liquidation above the price. So it does make sense that we're going to see progression towards those levels with a likelihood of rejecting off of 220. Now, the reason why I feel 220 is a heavy resistance is because it worked previously as a strong support level. Price did not break below, came up for a dead cat and pulled back, right? So at this point, even though we've consolidated nicely there, we still have yet to retest that level. 9 times out of 10, when you retest a previous support level or a range, it's oftentimes going to reject the first time. So my speculation here is the price come up, kind of pull back to maybe 210 and continue higher. If it works out the way it should, and Bitcoin doesn't get stuck on stupid and go down towards 80,000 or lower, right? Between now and then, though, I think XRP between 2 to 210 is a heavy consideration for adding to your spot bag, or more so just a good buy at this point. It's performing better than most other coins for the moment, and I think that's going to continue at the very least until we hit this local level. At that point, we'll go and reevaluate and see if it's worth taking a trade, but just know the secondary resistance for us is 235 based on a significant amount of volume resistance above the price from that previous range.